We are seeing a conflict, an increasing tension between the East and the West, or between China and the US. Now the thing is, we also have seen since 2012 China being under the leadership of Xi Jinping. Xi Jinping is pushing the communist agenda on China, and that agenda has undesirable consequences. And this is what we're going to be explaining in today's video. Xi Jinping has put a lot of capital restrictions on China, and those capital restrictions, any country that implements too much capital restrictions would have a flee of capital from that country. And that's precisely what I hope to demonstrate to you guys on today's video. So without any further ado, let's get straight into the video of today. Just remember, nothing that I say across any platform is to be considered financial, tax, or legal advice. Now, as the main slide shows, we're going to be talking about the capital and the social capital that is fleeing from China. And we're going to begin with an article of 14th of November from BBC, Why Businesses Are Pulling Billions of Profit from China. We're also going to look at stocks. As you can see on this graph, the blue line is the Chinese ETF, or stocks of Chinese companies that are traded outside China. And you can see that for the past 5 years, there's a decline of over 60% on the Chinese market. However, on the same 5-year period, all the other markets are up. You can see on the American market, 65.7%. You can see 11% up on the European market, 13% on the Japanese market. The only market that is significantly down is the Chinese market, and that's because capital is fleeing out of China as China becomes more and more compromised with the communist agenda. Now, this is just one graph. Here is a graph that shows quick money that is easy to go in and quick to come out of China in terms of investment. And that money is also moving out. As you can see on this graph, there's $30 billion in one single month being pulled out of China. And that is, of course, at least in my view, because of Xi Jinping's pushing the communist agenda and a lot of capital controls in China. Once capital sees restriction, capital tend to flee the territory where there's restriction. And that is, to me, the main reason why the Chinese currency is not likely to become the world global currency. In order for the currency to be used globally, it must be able to freely trade globally. And the Chinese money is not able to do that. And the capital in China is not free to go in and out. And whenever that restriction increases, you're going to see fleeing of capital. Now, this is just quick money from international investors. Let's look at other sorts of capital. We can see here the foreigner direct investment. Now, this investment is not as quick. You can move in quick, but it's very difficult for you to move out because it's more of a long-term investment. Now, here we see another article saying that we have seen the biggest fleeing of capital out of China since 2016. Now, when we look at long-term capital that goes in for long-term investment is not as easy to come out because it's most likely to be used for purchasing and acquisition of companies. Now, why is the first time going out since 1998? In my view, it is because Xi Jinping is taking China into a different direction, a direction that is violating private property and is not respecting capital. When capital is not respected, capital will flee out. Now, we talk about the quick capital for foreign investment. We talk about long-term capital, also foreign investment. Now, let's look at what's happening with the internal capital that is made by Chinese people. And we can see here the capital of those who are part of the Communist Party. Now, it's important to understand that Xi Jinping have taken measures to really punish corruption within the party. However, that does not stop corruption. You can see on this article that Chinese involved in the Communist Party has used their influence and their knowledge to do inside trading and capitalize, increasing the amount of their purchasing power. However, they are also looking for creative ways to get that capital out of China. So you have international investment no longer coming into China, but going out of China on both fronts, quick investment and long-term investment. We also have now the local capital looking for creative ways to get out of China. And one way in which they do this is by acquisition of gold and jewelry. There is a limit of how much you can take out of China in terms of capital. Most countries have a bar of $10,000. However, that does not account for jewelry. And you can see how people are using gold bars or gold jewelry to be able to move their money out and move that into Japan. Now, why is the capital going to Japan? One is proximity. The second reason why they're going to Japan is because Japan has a lot of capital freedom. That's why the yen, the currency of a very small island, is listed on the top 5 reserve currencies of the globe. Again, freedom of capital guarantees more inflow capital to your country, contrary to what Xi Jinping may believe. Another reason why capital is fleeing out of China is not just because of capital restriction, but also because of lack of transparency. As you can see on these headlines, Xi Jinping made very clear that he does not want any negative news to be reported, which means from that point on, you cannot trust anything. Look at this. He specifically asked the banks and the media not to report or make any negative commentaries. And of course, if there's no clarity, there's no way that a capital is going to remain within that country. So we already talked about investments from abroad, which means foreign investments, long and short term. We're talking about local capital. Now let's talk about the human capital. China has made a mistake. China has right now a diminishing population because of the control on the birth. Now there's a documentary called The One Child Nation. If you do have the stomach to watch it, please watch it, and you're gonna see how horrible those measures were for the population. But this is a subject for another video. Another thing that is happening in China, China has very difficult immigration laws. People do not want to migrate to China because of the immigration regulation, but also because of being a communist country. You don't see communist countries being able to bring people into the country. Most of the time you see communist countries having people trying to flee out. The Berlin Wall, for instance, was not built in order to prevent other people from coming into communist Germany, but trying to stop those from fleeing out. Now China is becoming communist, and you also have a shrinking population because of the measures of the government, but now we have also people fleeing out of China. As you can see on this graph, more people are typically to migrate out of China than into China, and the projection is going to continue like that for a long time. Now, of course, the consequences of all this is that you have all sorts of capital departing China. We also have examples of companies such as Sequoia Capital separating from their affiliate in China. Another thing we can look at is Hong Kong. Hong Kong was given back to Chinese regime in 97. Now, before that, Hong Kong was pretty much a great capital, great place for investment. Hong Kong was one of the most prosperous islands in the globe. But remember, it was under the administration of the British, and they have very friendly capital regulation, which means there was a lot of freedom of capital, and Hong Kong became this hub for investment. However, once Hong Kong goes into the Chinese control, now with Xi Jinping in power, Xi Jinping is taking away that freedom of capital. And what we see is companies and corporations also exoding, leaving Hong Kong because they no longer can enjoy the same amount of freedom. I think Hong Kong is a very good example of a place or a regime that treats capital well, respects private property, and gives capital freedom. That was Hong Kong until given back to the Chinese. Now Xi Jinping and the Communist Party are changing the rules and the dynamics around capital in Hong Kong, and in my view, Hong Kong is going to be on the decline. And by this graph, you can see the amount of American companies in Hong Kong and the amount of Chinese companies. And you can see that we already have an eclipse where the large amount of companies in Hong Kong are run by the Chinese government, and you can see a decline on companies that are connected to the US. It's not just capital, the human freedom as well. You can see how Hong Kong was listed as the third on the ranking of human freedom, individual freedom. And since Xi Jinping started to take over Hong Kong and implement rules and regulations with the communist agenda, Hong Kong went from being the third most free place in the world, and now is becoming the 34th. And I think this is going to continue on a decline because communist regimes do not like freedom. And this is just one example, and to me it's just the beginning of what's going to happen with Hong Kong. Now, in my view, unless Xi Jinping change his agenda and make a U-turn, allowing more freedom of capital, China is going to go into a very deep recession. And if China goes into a very deep recession, that is problems for the global economy, because China, until now, seems to be the world's main manufacturing country. It's very difficult for you to find anything in your home which is not coming from China and has not gone through China. Also, one of the largest ports in the world is in Hong Kong. Not to mention that the China Sea, the Strait of Taiwan, is one of the busiest areas in terms of shipping on the globe. Now, for us to go from a place of extreme globalization where things are manufactured pretty much in Asia and then Asia export everything to everyone else, now to have everything produced localized, that is, in my view, inflationary pressure. We have very deflationary pressure in a globalized world, but as we move now towards deglobalization, because China is no longer being a place where we can trust our investment, that is inflationary pressure. Now, of course, there are benefits to the globalization. There are benefits to being able to produce things locally, but during that transition, it's going to be very hard and the prices of things are going to go up. At least that's my view. What is your view? Please let me know that on the comments below. So now that is the situation I see in China. I don't see a reversing of the capital fleeing out of China. If this trend continues, China is very likely to go into a recession and bring the global economy with it. Besides that, as the world becomes deglobalized, we need to understand that that transition from a globalized world into a deglobalized world is going to be painful. We are very likely to be paying more for less quality because remember, the way we had things before, we had cheaper goods. Things being produced massively in one place, increasing the efficiency, and of course decreasing the price. Now we're going to have to sacrifice those benefits, which means pretty much we need to say goodbye to the time where things were cheap, and we're going to have to be paying more for things that are going to be less quality and less efficient, because that is the price and those are the consequences of the transition. Eventually in the future, in a deglobalized world, things being produced locally, we're going to be able to achieve higher efficiency, meaning producing things better and cheaper, but until then, we're going to have to pay more for less efficient. At least that's my view. Now, another thing that also may happen is, as China sees themselves in a collapse, they're not going to go down without a fight. I think it's going to be a point where China is going to use the advantage that they have militarily and make a move towards taking Taiwan. At least those are my thoughts. What are your thoughts? Please let me know that on the comments below. Now, this is it for now. If you did get value from this video, please give the thumbs up. If you did not get value, give the thumbs down and let us know why. But above all, if you do know someone who can benefit from this, please do share. So that's it for now. Please like, subscribe, click the notification bell, and see you guys in the next video. Kaboom! Goodbye.